Alrighty, guys, how's it going today? So I'm here in Marseille, France, filming at the what's it called? Les Terrasses du Port. It's a pretty beautiful shopping mall that overlooks the Mediterranean. Cannot complain about the view whatsoever. I'm in love with this city so far, and the culture is phenomenal. The history is great, and there's so many buildings to see. But what I am disappointed about is the food, as you guys already know. Every night, the majority of my days, it'll consist of actually just walking around and looking for food, and I have not been satisfied once yet. The most satisfying thing that I've had is actually this right here, which is just a bolognese with lots of parmesan. Maybe it's the parmesan, maybe it's just the tomato sauce that they have in it. But either way, it's kind of hitting home right now. Need a little bit more salt. I find that the French culture, they're not really too into sodium the way that we are as well. So anyways, let's get into this. Bitcoin has moved a tremendous amount today, right? When I say a tremendous amount, I'm talking by $150, which is a big amount compared to normal standards, considering we've been in a sideways trend for the past few days now. I think we can all agree with that. So let's do a very brief technical analysis and see where the support regions are and where we can hope to find a possible target if the support does hold. So every time you think of a support, always think of it from the perspective of what was previously a resistance will now become a support, and what was a support will now become a resistance as well, right? So where was the major support or resistance that we broke before? It was most likely and definitely this area over here. So now, guys, we are in a region where we could easily find support. And if we do, there's with 100% certainty, in my opinion, that we could most likely aim for roughly the 69 to 7,000 region. So let's look at it on the daily chart, going really, really far out, okay? So what I would always advise to people is to always go to a logarithmic scale. So what a logarithmic scale does is it doesn't keep your data static. It'll compress specific parts of the chart to make it much more viewable, put it that way, right? And also, if you guys extend your trend lines the way that I'm showing you right here, okay, this part did not hit the 0.618 fib level, right? So the first step, in my personal opinion, is to always draw a major trend line. Just do the most basic type of technical analysis first, okay? Do a basic technical analysis by drawing your trend line simply like that, okay? And then zoom out as far as you can as well. And then see if you can actually identify other modes of support as well. So right now, we actually see it sloping upwards, right? But the general idea is that it's more so a horizontal support that we're seeing like this, okay? Right, that makes sense as well. We're just seeing it sloped kind of at an angle like this right here. So this will be the first mode of support if we do find it around 6,200, if it does drop to that particular region. So there's no doubt in my mind right now that this is the most basic type of technical analysis that we can do, right? Simple as that. Here we can consider it a bull trap region. Some of it poked outwards and we got to a bull trap region as well. Here we got to a bull trap region as well. And what's significant about all of these drops, if you guys have noticed, is this right here, okay? So if I take the Fibonacci retracement level of each of these drops, what we will find is that it is reaching the golden pocket. Now, I'm only going to review it one more time for the people that are unfamiliar with what the golden pocket is, because I've reviewed it many times already. In a few weeks, I'll review it again like I always do, but I don't want to review it in every video. The golden pocket is a region between the golden ratio at the 0.618 Fibonacci level and the 0.65 Fibonacci level. Now, think of it as a little pocket where it goes into and it catches it, okay? Not only that, I'm going to give you guys a quick lesson video as well when it comes to trend lines, okay? So as you guys know, on an uptrend, what you would ideally like to do is catch it at the golden ratio right here, right? You want to catch it at the 618 Fibonacci level right around there. And then that's where you go long on it and take a chance. But on a downtrend, guys, it's actually the opposite. And we got to remember that, okay? It's the opposite. So on a downtrend, what the bulls do, or sorry, what the bears do, is they'll catch it on the downtrend and they will start shorting it at the 0.618 Fibonacci level, right around there, right? That makes sense? Okay, So right there is where you'd want to catch a short. So what's been happening for the past few times now is that every time it has got to the 618 Fibonacci level, we see a major downtrend, right? So here is a 618 Fibonacci. There's so many flies in the mall, I've noticed. Sorry if I'm kind of just waving around here, waving my hands in the air just like I don't care. Everybody's looking at me like, who's this motherfucker that's speaking English right now? It's funny, kind of funny that if I swear right now, nobody would probably even know. I wonder if a lot of people actually understand French, English swears here. But I'm actually surprised by the fact that there's so many English-speaking people here, and if there are not a lot of English-speaking people that speak fluently, there's a lot of people that speak it on a very basic level that's more than enough to help me get around. Right now, I'm actually using an app called Duolingo. Okay, my French is very basic, but I'm putting in about 1 hour of work a day because I would like to be fairly fluent in French, mainly for a girl, Celia. If you're watching this video, I'm going to learn French for you, and our babies are going to talk French as well. So anyways, 618 Fibonacci level, and then boom, downtrend is where it started, right? But here, it didn't even get to the 618 Fibonacci level. It only got to roughly the 0.5, right? Almost between the zero point 0.5 and the 618 region, right? And here, we're seeing this again right here, right? Watch this right here. Some people are saying this is a major dead cat bounce, but it actually got a little bit higher than that, okay? This one got to about the zero point 0.5 to the 618 region again. So that's how we do a very basic technical analysis on a grand scale. One, check out your Fibonacci retracement. Actually, one is draw your trend lines. And then two, do your Fibonacci retracements to get a general idea of where it is hitting before it starts to downtrend. Now, let's take a look at as well just the strength in general, okay? If we compare these lows, right, these lows, one low, second low, and the third low right there, what we're finding is that after each low, everyone's looking at me like, who's this guy with his laptop out in the mall? Actually, there's a lot of people out with their laptops here. So anyways, this is a low there, that is a low there, and that is another low right there, okay? So now I'm actually gonna go join. I'm probably gonna go join someone that has a laptop. There's a person sitting there at the table, and she looks like she wants company or something, or he two of them actually. So anyways, this low there, OCD moment there, squirrel, squirrel. So there's a low there, there's a low there, and there's a low there as well, right? But what we're noticing about the price action is it's similar price action, but we're getting a series of higher lows every single time, right? So on the daily chart right now, guys, it looks incredibly bearish, okay? This is not a good time to go long on it, okay? There's two types of traders. Trader one will be the people that will take a chance, okay? They will take a chance and they will try to catch it at the bottom as it is rolling over. Now, of course, you're going to get the best opportunity for profit-wise, right? But of course, there's going to be a lot more risk simply because you're taking a chance and you don't know where the bottom is and you have not confirmed anything. And then there's trader number two, where I'm kind of in between trader one and two. So trader two, what they do is they wait for signs of confirmation and bullish divergence before they actually enter into a long position. So what we're seeing right here is that the histogram is actually starting to tick down, guys. And because the histogram is starting to tick down, okay, right there, what we see is that ever since July the 25th, okay, July the 25th, it's going down and it's going down. And we're getting a series of a lower histogram tick every time. Now, I don't know about you guys, but for me, that's a clear sign of a reversal thus far, okay? Well, you never know. It might have a chance to just break out of it, right? It might just be a 1 or 2 day tick, hopefully not like a 4 day tick. We tried to break above the 55 EMA and simply failed. So what were some of the signs, okay? What were some of the signs that would have given way to short the market or to take some profit as a day or swing trader? So as a day trader, you'd want to look for reversal type candles, okay? You want to look for reversal type candles that signal to the market that the bulls, well, first of all, the bulls are going on an uptrend, 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 uptrend. And then the moment that the bears start to show signs of strength or they're coming into the game, that is where you want to look and say to yourself, okay, well, if the bulls have been on this massive rally and there's been actually they're not contesting whatsoever the bears. Well, if the bears are starting to step into it now and they're showing signs of reversal candles, could it mean that it's near the top? Yes. So Eric Cho and I yesterday, we were actually talking about how we were looking for inside bar candles, okay? Inside bar candles would have been amazing and it would have set up the way for us to actually get a higher high for the next day as well, which implies that the bears might have tried, but the bulls simply defended it and pushed it upwards, right? So this is the candle right there. This is called a hanging man candle, okay? It's kind of in between a hanging man and a doji, but I'd say more so with the hanging man. And the reason why we call it that is because of the long wick to the bottom, slight wick to the top, and basically a body or neck, right? And then that signals that the bears are actually trying to push it down below the 55 EMA. And then here we get a doji candle. Bam! That signaled right away to the market that it was not simply possible to break into a higher high. So because today we couldn't break into the higher than the actual opening, which was 67.23, we simply lost momentum. Now, I don't know what time I think it closes in 12 hours, right, guys? It's like 7 p.m. in Winnipeg, Manitoba. So that means that sorry, super distracted right now. 7 p.m. Manitoba. Yeah, okay, so 2 a.m. my time here is when it closes. So we still have a good 12 hours to actually go before the daily closes. Now let's look at the 2 day as well. 2 day is looking incredibly bearish, guys, okay? Super bearish. So today we are on an even day. So let's take a look actually. Let's go to 1 day. Yeah, okay, so we're on the first day of the second day right now of the candle. So it's not really a good indication. Let's go to a weekly chart and see how this is looking as well. On the weekly chart, this it actually ended. Hold on, did it end? Does it end today or yesterday? I can't remember. Let me double check here. Okay, so now we just started a new week. Fairly bullish week in my opinion, right? The volume was fantastic if you look at it. Volume was so fantastic compared to the previous week. The previous week, there's no way that the Bulls would have even implied that they would have taken control. All that they've implied with very little volume was that there was not a sell-off and that there was just enough volume to sustain. So because this right here, if you look at it on a weekly, guys, this doesn't even make sense to have that trend line angling upwards like that, right? This is the trend line that makes sense the most right now as a descending triangle, right? So this is a bullish hammer candle, right? So it's really early in the week, but what I think will happen still, in my opinion, guys, is that we're gonna get a candle kind of like that, just as an example, okay? Like whatever. I'm just gonna draw a very fat body to give you guys an indication of what it could look like. And then we're gonna get a wick that's gonna reject it, okay? Somewhere to up there. Like higher than that though, like it's most likely gonna go all the way up here, right? But I do think that we're gonna get a rejection wick to the 55 EMA and the major trendline resistance. So I think the majority of the public are going to be very interested in shorting the market around the 6,900, 7,000, and lots of ladders for short positions will actually be set up around the $7,100 range as well. I'm very sorry to say, guys, but I simply do not see it possible. Oh, sorry. Someone was just standing next to me and I thought she wanted something there. Okay, let's go to a monthly chart now as well since September was almost done. Okay, so the monthly chart right here is looking so bearish, guys. But you know what the good news about this is? Okay, the good news is that let's take this off of a log scale and just go to regular. This looks like it's a flag, right? You got the massive flagpole that's going up from here. Okay, just as an example. Okay, you got this huge flagpole that's going upwards like that, and then you got this flag coming down, right? That's kind of you can draw it from there or whatever. But either way, it is setting up right now for a really large bull run. Just not anytime soon. It could be very much so in the future. Okay, so and also another note that I would like to point out is that if you guys notice here, this one is specifically the 21 EMA. I use the 8, the 13, the 21, and the 55 EMA specifically because they're Fibonacci numbers, right? And what we're noticing right now for the week already, for 2, 3, actually for the month, guys, for 4 months in a row, what we're noticing is we're finding some major support around the 6K level. So for the bulls, this is some awesome support that we're finding thus far. But is it going to be enough to propel us and use it as a launch pad to go upwards? Maybe if we found support here for many, many months, it's possible, but in all honesty, guys, I still believe that we're incredibly bearish, and I do think that we're going to test around the 5K region. It may not be the end of this year. It might not be early next year. Actually, it could be early next year. but I do believe that we need to make a major test around this region right here first, okay, before we can actually propel it to some higher highs. But what I was going to say was that you got to notice the 21 EMA acting as major support right now. So because the 21 EMA is acting at major support right around the 6K level, we got to always question, is this enough, guys? So the point of my technical analysis is not to give you guys buy and sell signals. It's to teach you guys how to rationalize and think in the market independently, because ultimately we have to rely on ourselves, okay? So I'm gonna give you guys an example of a crazy candle on a 1 hour, okay? Here, right here, okay, if you guys are a scalper, okay, right there would have been a great place to enter a short, okay? As soon as this candle formed, right? As soon as this candle formed, it went up, right? It went up and it actually rejected at the 55 EMA. So think of it as a 55 EMA and then and there's a wick that pokes above it, okay? If it pokes above it just like that, then that's where you know that the bears have successfully defended at a specific EMA. Not only that, there's all of these crossovers. Do you guys remember my moving average crossover strategy? That's exactly what it is, right? The bears or the bulls have pushed it up and the bears simply rejected them down. So this would have been above in this range right there when this candle formed and we saw that they rejected it. That would have, I can't really trying to click here. There you go. That would have been a perfect scalp opportunity today for a 1.5%. So people always ask me, how are you able to scalp as successfully as you're scalping? It's because my fees are 0.04%, okay? 0.04%, as I've shown you guys before. And when you have those kind of fees, where on every $10,000 that I'm trading, I'm only paying like a $4 fee, I'm really cool with that, you know, so you can actually scalp for a long time and do it very successfully as well. Okay, so now that we've done kind of a basic technical analysis, let's look at it a little bit more in depth as well with moving averages and RSI, okay? So on RSI right now, what we're seeing is it's down ticking on every single chart, okay? Every single chart, we're bear. Okay, how do we confirm if we're bear or bull? Simple as this, and let me show you guys. We confirm if we're bear or bull by adopting the the golden crossover or the death cross strategy, right? If, for example, we're well below the 55 EMA and also the 200 EMA is above the 55 EMA, that is called the death cross. Do you guys see the 20-minute chart right here? This is the death cross, right? Where the yellow line, which is the 55 EMA, is now moving below the 200 moving average, right? So the 200 moving average basically acts as a resistance above all of it right here, right? And we're actually finding bullish momentum right now on a 20-minute chart. So we're going to get a slight bounce. How do we know? Because these two regions right here are the same price action, right? But we're getting strength in the market. So I believe we're most likely going to go back up and test around the 6160 region. So that's a great opportunity for scalp. But we're still bear because we're below everything right now. Now, when you use the moving average crossover strategies, that's to basically confirm for a larger degree, in my personal opinion. But if you want to play it on a shorter time frame and you want to catch the bottom, remember the two traders I was talking about? We're talking about the ones who are trying to catch the bottom that will adopt a lot more risk, but they're going to be much more profitable, or the ones that wait for a lot of confirmation before entering. So right now, the volume is really low on this 20-minute chart, but there's a lot of mixed signals, right? Volume is low, which is bear, okay? Which is bear, it should be a lot higher. But if you look at this right here, we're getting a higher low on the actual RSI, and also the 20-minute chart shows that it's starting to tick upwards positively on the histogram. So if we keep going, we're seeing bear all across the board right now, okay? All across the board. I wish I could say it was bullish, but unfortunately I can't. So if we look on the 8-hour chart even, we're about to cross over, guys. In about 3 hours, one more, and we're most likely going to cross over into bear territory. But, guys, because we're so close right now, honestly, we're just so freaking close to finding support that I believe, and by the way, do you guys remember me doing this yesterday? Come on, you guys remember me doing this yesterday, right? That's a very, very high chance as well of happening, okay? If we don't find support around these levels and go for one more, okay, and one more wave up, then we're gonna find support, first of all, at this a possible channel, because you always have to assume parallelity, right? And also, you wanna take the Fibonacci region, okay, right now we're most likely at the 382, There you go. We're at the 382 right now, okay? So there's a good chance we'll find support around the zero point 0.5 Fibonacci level first. So after all of this said and done, I do believe that we're going to find support above 6,300. Yeah, I hate this. The Bulls probably love me saying that, but 6,300, guys, is a kind of a key number for me. And other than that, I already drew the triangle for you guys. That's a bearish descending triangle. Simple as that. And once we reach 69, 7K, $7,100, I firmly believe that the bears are going to take over. That's what I believe. But you never know what level two and price action actually dictates, right? So if price action dictates that we could have a massive bull run upwards, then we're just gonna have to wait and see. And that's gonna be a signal for us to add a tiny bit to our short position. And then if we propel really high and the volume picks up and the level two just looks beautiful and green all across the board, that's gonna be another signal to break out and to purchase even more. So anyways, guys, have yourselves a great day. Thank you very much for watching this video with me always. And it's been a pleasure to film live in Marseille, France at the Terrasses du Port. I'll see you guys later today. And if you guys are curious about the positions that I'm in zero today. And how much am I up today? Go check on Twitter. I'm up 1,100 American dollars by 2:20 p.m. And now I'm off to explore France some more. Bye guys. Have a great day. Thank you for watching once again. Oh, last thing I forgot to say. If you guys are not following me on Instagram, check the link below. Follow me on Instagram to see my travels across the world. Because guys, I'm semi-retired and I don't ever plan to work a day in my life again. And I plan to travel for the rest of my life because that's what crypto money does. See you guys. Bye now.